It's Fed Day, and as per the usual, the market will be intently focused on what comes of the central bank's latest policy decision. The overwhelming expectation is for a 25 basis point cut in the Fed funds rate, and considering the fact that the U.S. economy hasn't altered in any meaningful way since the last meeting, it's more likely than not that the focus will be on the Fed's outlook for future decisions. The decision is scheduled for 2 p.m. Eastern Standard Time, where Fed Chair Jerome Powell will read a statement and then follow up with a presser at 2:30 p.m. Eastern Standard Time. The most concerning shifts in the U.S. economic data has come from the decline in payrolls and the deterioration in PMIs, though these downturns were already evident at the previous decision and things have since stabilized. Meanwhile, the Fed's concern about external threats of global trade and Brexit should be a little less worrying at the moment, with both of these risks producing more optimistic headlines. This leaves us expecting the Fed holding with its projections, which forecast the Fed funds rate at 1.9% into year end, with no change in 2020. All of this will play into Fed Powell's mid-cycle adjustment narrative, with the Fed accompanying talk of downside risk with more upbeat expectations for U.S. economic recovery. Of course, this isn't exactly what investors will be wanting from the central bank, as any signs of the Fed being done with cuts and getting back to thinking about the next move whenever it comes being higher are signs that could inspire profit-taking in a stock market that has quite arguably run too far and fast over the past decade. If Powell and company produce a message that's less dovish than the market wants, we anticipate downside pressure in risk markets. If, on the other hand, the market feels good about Fed dovishness, risk assets could look to make another run to the top side. That's all for now.